Most of these traders are making these daily mistakes every single day, and if you're somebody that's not hitting those consistent profits or those consistent goals, then I'm pretty sure you're guilty of one of these things. In this video, I'm gonna show you exactly what mistakes you're making and show you how to actually fix those mistakes. I feel like a lot of people will be telling you about your problems and they don't be telling you how to fix your problems. I'm gonna tell you how to fix your problems and what you need to do, because I did it and I'm guilty of all of these in the past. But I'll show you how it's been helping me to be able to average a little over 6 figures every single month trading consistently. Longevity, long-term sustainability. That's what we want, man. That's what we're chasing when we talk about trading. Mistake one, you heard it too many times, but you're over trading or you're chasing that up candle. You see crazy volatility in the markets and you feel like you're missing out on all the action, so you impulsively get into a trade, you impulsively make a decision that will be a damper on your trading account. But you're like, okay, the charts are going crazy, they're moving a lot right now, it's a lot of volume, it's a lot of volatility, I'm missing out on potential profits by just watching the markets go. But listen to this. Only focus on high probability trades, sticking to that framework that you back tested so many times. Usually when you hop into that impulsive trade, it kind of ruins the entire session. It kind of ruins the entire trading session to where you're probably going to keep making dumb mistakes until your trading account is blown. And then you're like, okay, I've did this before and I've had profit. That profit isn't long term. It's not sustainable. You can't keep doing that consistently because it's not going to work most of the time. Another thing, you think price is reacting to these said support or resistance levels. No. All it is the market makers are just inducing liquidity. You are the liquidity. You're about to get taken out. You think this is a strong support level. Oh, price hit off this 5 times. No, that's just induced liquidity. That's relatively close, about to be taken out. But here's how to fix it. Instead of looking at normal support and resistance, look at it as liquidity grabs. Look at it as sweep of liquidity. Then confirm it with order flow to see if you can get an entry and take advantage of what just happened in the market. Stop thinking these invisible lines are going to save you and make you a whole bunch of money. You think price is going to come down to this invisible line that it quote unquote jumped off a million times. No, I want you to understand that the charts are strictly just a representation of what price is. The charts aren't what you think the charts are. You have to take off that invisible barrier. I'm telling you. Make sure you like, subscribe, comment, and click every single link in the description. Let's get this money. Number 3, you are entering trades too early. You see price come down to a fair value gap or an order block, and you are expecting it to take right off. You're expecting to go right in your direction. If this is happening to you and you keep getting stopped out doing this, just wait on the continuation. Wait until price has already shown you that it's going to respect the order block or is going to respect the fair value gap, and let that be an added confluence to whatever integer or whatever strategy you're trading. That way you don't keep getting hit stopped out early. You can even use this 3-step confirmation process. 1, liquidity sweep, the fake out before the real move. 2, BOS, a break of structure on the lower time frame. 3, retest structure with confluence, whether it's a fair value gap, order block, breaker block, doesn't matter. Another, you're not using the right time frames for entry. That's another mistake. You are trying to execute trades on the 1-minute time frame, but you're getting 4-hour directional bias. Like, how does that make any sense? I'm going to find out where price is going on the 4-hour time frame, and I'm going to execute on the 1 minute, which is so irrelevant to the 4-hour time frame. You know how many times you'll be stopped out? You could even be right on your 4-hour directional bias and you'll still be wrong 100 times on the 1-minute time frame. Stop trading the wrong time frame. Your higher time frame should show intent, but your lower time frame should show that confirmation, and it should line up periodically. So for example, you're probably going to line up the 15-minute with the 4-hour, the 1 hour with the 5-minute, the 1 minute with the 30-minute, etc., etc., etc. Make it actually make sense on that higher time frame. Get your directional bias. Mid time frame, get your order flow. Lower time frame is the entry trade. Another thing is holding your take profits past your optimal take profit. You catch a sniper entry, but instead of closing your trade, you're waiting for bigger profits. It's kind of like greed. I want to say it's gambling, because you're hoping for more even though you got so much. You're waiting for this bigger take profit that never ends up coming. Take profit 1, you need to be taking partials at FVG, some kind of P array, or relative equal highs, relative equal lows. Take profit 2, you can take off 50% at the next liquidity zone. Take profit 3, trail stop for the runners. And if price breaks structure against you, just get out the trade immediately. Take your profits. Don't give back what the market gives you, because it doesn't give much. This is the last mistake that a lot of people do. You're trading outside of high probability times of trading. You're getting smacked at random times throughout the day. Stop trading randomly. You're trading New York Open with the Asian range mindset. Trade during kill zones. Trade when your strategy or your concepts are most optimal at that time in the day. London Open, 2 a.m. to 5 a.m. EST. You'll find amazing setups there and where concepts are most likely to play out. Those are when fair value gaps and order blocks are most probable during any time zone or trading session. New York opens 7 a.m. to 10 a.m. EST. This is all EST, by the way, because I'm EST. That's where the smart money traps and the real moves occur. New York closed 2 p.m. to 4 p.m. EST. This is where you need to be taking your profits, and this is where possible reversals are going to happen. Try not to trade like the low volume or low volatile trading zones like Asian session. So on some pairs, they do go crazy. Like USD I've been seeing a lot of more movement and volume on there, but other times, just get away from the chop. Get away from the choppy chops. These mistakes cost traders thousands of dollars. And if you're somebody that's guilty of this, drop in the comments below. Say, I'm fixing this today. Let's get this money. If you want to trade with me free for 7 days, link is in the bio. If you want a one-on-one mentorship with me personally, where I'll have you profitable in a small amount of time, click that first link. Let's get this money. It's 2025. Stop being a bum. Run up some millions. And enough said. Follow me on Instagram. Stay up to date with me. I'll see you later. It's Kino. I hope these mistakes helped you and that you don't make them, because I made them so much. And I still make stupid mistakes here and there, but mistakes are mistakes and they need to be changed. They need to be fixed. Like, subscribe, comment. I'll catch you next video. Peace.